Okay. Hi, I'm Channing Hamlet. I'm a managing director with Objective Capital. Uh, Really excited to be here with you today with Larry Simon, who's at Clearview Capital, talking about what's going on in the private equity world. So, Larry, why don't you just take a second and introduce yourself?
Hi, I'm Larry Simon, a partner with Clearview Capital, and I manage the West Coast Los Angeles office. I've been at Clearview, which is based in Connecticut, for 15 plus years and have a strong focus on deal and transaction origination, growing the investment pipeline and meeting with intermediaries and companies.
Cool. Larry, why don't you tell us just a little bit about your firm's investment strategy and what types of companies you're looking for?
Sure. In terms of our firm and strategy, we're currently investing out of Fund 4, a $550 million private equity fund, which was recently raised and completed its first acquisition in 2019. Historically, we have acquired over 30 platform investments and have done 75 add-on acquisitions, while exiting 19 of these platforms to other private equity groups and strategic buyers. The industries we generally pursue are business and healthcare services, specialized distribution, and value-added manufacturing. Initially, we seek platform companies with 4 to 15 million of EBITDA that have a potential to double or triple their top and bottom lines with a strong financial partner that can aid in the strategic growth. Typically, we invest in businesses with experienced management teams that reinvest into the companies with us. They're seeking to grow their businesses organically and with add-on acquisitions.
So I guess the question that everybody really wants to know is, how has the COVID crisis impacted your thinking in terms of what you're investing in and how you're thinking about companies that you're looking at?
Sure. The COVID crisis, of course, has impacted the world, but especially impacted strategy and private equity groups. In terms of an even higher focus on our existing platform investments, i.e. investments we've already made, where fund capital's been deployed, and the companies need a lot of TLC, making sure they have the liquidity they need to survive and continue to ultimately prosper in an environment with, for the current time being, has strong or difficult economic headwinds. Making sure that management has our support and undivided attention as they go through these challenging times is very important to us and the survivability of these businesses. This support includes management and personnel support decisions, operational decisions, add-on acquisitions. We just completed an add-on for a portfolio company during this pandemic, and we have signed an LOI to acquire another company as an add-on acquisition. Financial support is very important. We have an eye towards the downside protection of the business. That means backing it with debt lines, equity from the fund, personnel support, whatever we can do. We're there to help with lenders, advisors, consultants, and basically keeping company culture intact. It's very important. Our investment criteria is still consistent as we seek to acquire and invest in strong and middle market businesses with future growth prospects and defensible markets. Our guiding principles remain the following: do what we say we will do and back up our companies in good as well as challenging times. Maintain and enhance a true partnership with the management team. Continue the very prudent use of leverage and capital structure to position the management team and the company for growth and limited downside when events prove challenging, and have a fair-minded and efficient transaction execution process when we acquire new businesses, when we do add-on acquisitions, when we do strategic initiatives within the business. And to repeat, maintain the company culture post-acquisition into the future. Very important. I would say, for us currently, the outlook is for 2020 to keep our companies on track, focus on liquidity of the business, look towards selective opportunities, and find our spots where we can improve value. How does this situation, though, compare to 2009? How does this compare to the Great Recession? That's a great question. And it's not an easy comparison. Some big picture thoughts include the following. The Great Recession was built over the preceding years and was due to weakness in parts of the financial and underwriting system, which had an uneven effect on different industries and played out over a longer period on the global stage. However, the coronavirus situation, also on the global stage, was very sudden, and businesses were doing well generally, and then quite suddenly the environment changed and became deeply recessionary recessionary nearly overnight. I would say if you look at this in terms of impact on the US economy, this is the fastest bear market ever. Only 20 days for the Dow index to reach bear market territory. And with past declines in history averaging over 250 days, there was no time to prepare and pull the reins in on businesses, whether public or private. It doesn't really matter. Nobody was prepared for this. GDP is an interesting headline subject. 2020 GDP is expected to decline by over 30% versus the previous first quarter. So second quarter would be down 30% over Q1 2020, which would be 4 times as severe as the Great Recession. If you think about that, that's pretty intense and a lot for companies to adjust to in such a short time frame. And given the expectations for a possible steep recovery in the second half of the year, whether it's V-shaped or U-shaped, and more likely U-shaped, the US economy is still expected to contract over 6% in 2020. However, this is all subject to a change as events evolve. Unemployment, I'd like to address the fact that 26+ million Americans have filed for unemployment benefits in the last 4 weeks, shattering most modern day records. This compares with 8 to 9 million jobs lost during the Great Recession from peak to trough. What are the solutions here? Government response. The government has been swifter than during the Great Recession. Massive US government stimulus measures that are in the headlines every day. They want to prevent markets from freezing up, public markets, and directly help state and local governments, businesses, and individuals, as well as the private markets. This includes the CARES Act, which key features are the PPP, the Paycheck Protection Program, which are guaranteeing loans up to $10 million for employers with under 500 employees who maintain their payroll during the crisis. A new $484 billion bill last week, which added $320 billion in additional funds for PPP, and then the EIDL, Economic Injury Disaster Loans. Loans of up to $2 million with potential principal and interest deferment.
Just to wrap up here, let's end on a positive note. Tell us about one of your favorite deals.
Yeah, so one of my favorite deals and one of our best deals in the past decade is a company called Active Day Senior Care. It is the country's largest operator of adult day care centers. We completed 15 add-on acquisitions to become the industry leader, diversified from 5 to 11 states, and nearly quadrupled revenues to about $80 million, and then had a successful exit in 2015. That was a great business, great management team. They were heavily invested into the business, and it was a very successful home run. And with the 15 add-on acquisitions, we accreted great value. So it was a very good transaction, and that is still my all-time favorite Clearview Capital transaction platform exit.
That's excellent. I really appreciate you taking the time, and we'll get through this together.
Great. Thanks, Channing.